Iryna Pylypchuk, you are Director of Research and Market Information at INREV. Thank you for joining us on BiTV.
Thank you for having me.
INREV, together with INREV and Pylypchuk, recently published its 2023 Investment Intention Survey, which shows that 37% of European investors are planning to decrease allocations significantly above the 20% and 5% equivalent of their North American and Asian Pacific peers. How do you explain this important difference?
Well, I think there are many things at play here. The watchword for last year has definitely been uncertainty, driven by rapid interest rate rises, inflationary pressure, and geopolitical tensions as well. And when it comes to European markets, European investors have, of course, been invested in the real estate for a very long time. So they were already very close to their allocations. And if you think about the real estate as a private asset class, the correction is a lot slower than is the case for listed sector or fixed income. And therefore, in many cases, it's technical over allocations to real estate that is driving the sentiment effectively. So we've got 16% of European investors who are still looking to increase allocations, and 37 which are looking to decrease. On balance, it's a net increase. A net decrease, apologies, but that's not surprising. It contrasts with Asian Pacific investors where, they are still structurally under allocated. There's more of a mix in terms of health of the economy and to what extent the interest rate have been rising. So there, the gap is still positive and the intentions are strong to increase. And North American investors are somewhere in between, although many are also choosing to decrease as well, as you've mentioned.
Okay, thank you. The survey also shows that investors are becoming more risk averse in this period of uncertainty, and you predict a flight to quality in 2023. How could this affect investment decisions in European markets from a strategic and sectorial point of view?
Well, I think it's a difficult one to answer because, of course, you cannot paint with a single brush. But in the market circumstances like this, a shift to quality or to core, it's a usual trend. We have seen that even to a larger extent during the particularly after the global financial crisis, but also in the COVID period as well. In terms of decisions, we see the European investors are the most cautious. So that shift to core has been most pronounced. It's now 57% of European investors who are choosing core strategies. And when it comes to North American investors, we don't see much interest from them to Europe at all at this point in time. I think they're still waiting for more of a premium in terms of risk-return proposition and waiting for the prices to come down. What is interesting, however, is the Asian Pacific investors are boosting their opportunistic strategies when looking at Europe from 9% preference to 20%, which suggests they probably are looking to enter Europe in hope of more for the discount as they're looking for diversification away from their home markets and away from US dollar as well. So they're looking for that exposure. In terms of preferences, we still see France, Germany, and the UK as the top three markets. It's not unusual, they are by far the largest, the most liquid, and therefore are effectively safe havens. And the good news for France is that it's in the first position and is in strong preference together with Germany overall. So I think there's going to be interest in the French market in the year 2023, as well as Germany and the UK, and to a lesser extent, Netherlands, which is now in fourth position. what we do see is that there has been a very strong indication that actually the office sector will be in demand, and that's driven by both local European investors retrenching to their home markets where they see, value, and probably where they believe they have advantage competitively just because it's their market, so they can pick the right deals at the right price. Residential is still in a very strong place, not much change compared to last year, so really confirms a structural shift towards the sector and in inclination to grow exposure to residential. And the industrial logistics is in the third position. And given that it's repricing so rapidly, I think the activity in that segment of the market is likely to pick up sometime later in the year when the prices have corrected even more.
Okay, thank you. And you mentioned France, obviously Business Immo being a Paris-based media. I have to ask, because geographically, France is a clear first choice for investors from outside Europe, but only the third pick of European investors at 39% behind Germany and the UK. What can we draw from this contrasting analysis of the French market?
Yeah, I think you're absolutely right. I think what the international investors see, particularly the Asia and Pacific ones, is an opportunity to tap into the market where, normally it would be quite difficult to get exposure to assets. So I think they expect, because the market is quite quiet, that there will be less competition and a bit more of a discount. And they're very much driven by that need to diversify away from their home markets. As you know very well, for some time now, probably more than 10 years, the Asian Pacific capital targeted UK very heavily and continent as well, but I think it looks like France is firmly on their agenda, and preference for offices goes hand in hand with France. French office market is by far the largest part of the French market's universe. The stock is there. The fundamentals are good, and you've got quite a strong ESG agenda built into decision making. So I think there are a few things that are pushing for France in general, but also French industrial logistics and residential also feature in the top 10 when it comes to preferences. In terms of Europeans, I think it's back to retrenching back to their home market. So it's mainly the French looking back at their home market and thinking, how can they take an opportunity to invest? And that's probably why the contrast is as it is between the two.
Okay, Iryna, Pylypchuk, thank you very much for this insight at the beginning of what shapes up to be a let's say a very interesting year for European real estate markets. Thank you very much for your time, and also thank you, obviously, thank you all for joining us, and see you soon on BiTV.